Investors and traders, welcome to the channel Market Chart Pattern. Today is 21st of May 2024. I hope everyone is having a great day. In this video, we will be covering a number of things. We'll be covering the main US markets. We will start by taking a look at the dollar index. Then we'll take a look at the yields of the US Treasury markets, mainly using the futures markets. Gold and silver, brief look at them. We'll also take a brief look at foreign stock indices such as UK's FTSE 100, German DAX, and then we will also go and take a look at the market sectors in the United States. So US market sectors such as energy using the XLE ETF, financials XLF. I'm not going to go into the details of XLF in this video because there's already a dedicated video done over the weekend, but we'll just take a brief look at it. The housing index using HGX, consumer discretionary XLY, transports DJT, and utilities XLU. Apologies, I might have got the symbol wrong for the transporters, but we'll pick up the right one. And then we'll take a deeper look into the US stock indices. We'll take a look at the cash markets such as S&P 500 cash index, and the futures ES, NDX, and the NASDAQ 100 futures, Dow Jones futures, Russell 2000 futures, and also the ETF IWM. As always, this video is for educational purposes only, and it is not a financial advice. And what you see here, these are the standard deviation ranges to be expected for tomorrow. So that is the 22nd of May 2024 for the futures markets, which is the E-mini S&P 500 ES, the NASDAQ 100 E-mini futures, the Dow Jones E-mini futures, and the Russell 2000 futures. The +1 standard deviations are in this column, +2 standard deviation in this, -1 in this column, and -2 standard deviation in this. In short, what we are looking for is about a 33.15 points move in E-mini S&P 500, and then you can add and subtract to the last close for the last day to get your standard deviation level. So I'll also put this in the description of the video. The only thing is that the formatting is not great, so do apologize for that. I'll try to find a solution for it. All right, so we'll just get moving with the video. And what we are looking at is the daily chart of dollar index. It was a mixed day for the dollar. In fact, the dollar closed pretty much flat for the day, and over the course of last few trading days, about 4 trading days, since last Thursday, the dollar is finding a little bit of support, which is coming from this 200-day moving average. But overall, it does. Our thesis is dollar is actually likely to move lower, and this is what we are seeing. Actually, a fair amount of we have seen the dollar actually pull back a lot from this 106.36 level. We believe that 107 level is a pretty important high in the dollar index. So again, watching for this, but once this 200-day moving average price closed below this, then we could see a perhaps accelerated move to the downside, but the bias for us is to the downside. And on the flip side, if we just take a look at the Euro USD, it had a really nice bullish day last week on the 15th of May, last Wednesday, and it's just gone sideways. But look, it's just broken above the trend line, and the price has been above this trend line for a number of days, and the momentum is also improving. The price is above the 20-period moving average, which is also, and price is also above the 200-day moving average, which is much more supportive as well. So in a few days time, the crossover will take place, which will be good for the momentum for the Euro USD. All right, so now we'll move on to taking a quick look at the yields. So we'll start by taking a look at the 2-year treasury yields. So this is towards the shorter end of the curve. This is the daily chart. What you see on the right hand is the yields. This is not in terms of price, this chart. This is in terms of yields. And as you know, for bonds and treasury notes, the yields and price they move in inverse. So when the price moves higher, the yields move lower, and vice versa. So we believe that we have this head and shoulder pattern in place, and we could in fact be moving in this black ABCD lower which could actually see the yields on the 2-year treasury note move as low as 3.9%. Obviously, it needs to close below certain support levels. And what we have seen is over the course of last 3 trading days, the yields had actually creeped up a little bit higher towards this 20-day period moving average. But today it just broke that streak and closed negative for the day. So once it begins to close below the 200-day moving average, and especially 38.2% retracement, which comes around 4.70, we think that we could see perhaps an extended move to the downside, but looks like we are in this head and shoulder pattern formation. And now looking at the long bond futures, this is 30-year treasury note, 30-year treasury bond, also known as the long bond future because of the duration of 30 years, which is really long. Here the important thing is that we believe we are actually in the CD leg higher, but we have seen this pretty it's a pretty significant pullback, but it hasn't taken the lows out of 116.23, which is the bar from 15th of May. And today it closed higher, so that's actually good. And we have this 200-day moving average, which is kind of capping this price action. So once it begins to close above this, and in particular close above the 118.22, above this downtrend line, then I think we'll have a further confirmation that we are in CD leg. But my belief is that this point C is actually still valid. Okay, and then we'll take a look at the TLT. This is the ETF for 20 plus year treasury, 20 plus year duration treasury bond ETFs. And here waiting for this 92.40 to be broken to the upside. We have a very similar kind of a pattern to the long bond futures, and needs to get above and break this bearish symmetry pattern, get above the 38.2% retracement, and also above the 200-day moving average. Okay, now we'll go and take a look at the gold. So this is the daily chart of COMEX gold. So this is futures COMEX gold. This is not spot gold. If you're looking at spot gold, your prices will be different. So just want to reiterate that this is COMEX gold. This is not spot gold. Okay, so what do we see here? Gold has been pretty strong. It went and made a new high on Monday, and then it has kind of consolidated and pulled back, and in fact also went below the lows of last Monday. So one of the reasons is happening is because it was challenging the old high coming in from 12th of April 2024. Since February of this year, we have seen a really massive move in gold already. So my personal opinion is that, okay, we can see higher prices in gold, but they might not be at an accelerated pace. So they could be at moderate pace because of the move already taken place since February. So, a lot of that move to the upside has taken place. We do have upside targets. For that, I recommend you watch our weekend video. So there is a possibility that once we got into this red box that we had drawn, we may go into further consolidation. But on a daily chart, the price still remains above the 20-period moving average. But if you were to look at this on intraday basis, there is fair amount of consolidation here. So just watching this, and it's still possible that we may go sideways to a little bit lower in gold for a few more trading days, and then we'll find eventually a direction which is most likely going to be due the upside, because we still have upper targets to reach as well. Okay, and then if we look at the silver futures, there we go. This is the COMEX silver. This is not spot silver, again, just like the gold market. And it has this ABCD and then 1.618, and it formed, let me double check if this is an inside bar formation, 32.75. Yep, so it formed an inside bar today. So yeah, it looks like silver is also maybe go through some consolidation, but look, it's been a fantastic move to the upside, and the price is way above the 20-period moving average, is way above the 200 period moving average. So maybe it might just consolidate sideways to a little bit down for a few days, or it could just break out of this one and move fair amount higher. But consolidation is a little bit expected. Look, it's been a fantastic move. And then we'll start by taking a look at the foreign markets. So let's start by taking a look at the um, FTSE 100. This is the UK's market. This one has gone into a little bit of a consolidation. It came and tried to test these lows of this bar, which is from Friday the 10th of May. So essentially it's trading range behavior, but the price rejected lower price, and it did not close positive for the day. But you can see that buyers stepped in towards the bottom of this bar, and a fair amount of buying took place. So interesting to watch this. We do think it has the potential to reach up to 8565, which is the 1.618 expansion of this big entire range, and maybe possibly a little bit higher as well. Now we'll move on to the German DAX. Now the European markets had been consolidating, and you can see similar kind of behavior to the UK's FTSE 100 in German DAX. The really interesting thing is that this price level of 18,631, that seems to be a level where the buyers step in, because the price is testing this one time, two times, and buyers stepped in, although it closed negative for the day, just like the FTSE did, but fair amount of buying came in. I believe that if it goes below this level, then of course we have the structural high here, a little bit lower. It could pull back to this moving average, this 20 period moving average. That possibility remains. However, if the price begins to reject this lower or this low, which it seems to be doing, then 1.618 expansion is the kind of target we would be looking for. Okay, now we'll begin to take a look at the sectors in the United States markets. I'm going to make the sector analysis a regular. I'm not sure whether I will do this in depth during the daily videos, but in the weekly videos, I think we'll go and do a deeper analysis, or I might just create a separate video, because otherwise the videos get really long. So do apologize for that. So quickly for this session, we'll start by taking a look at the energy sector. So this is the Spider Select Fund for energy. And one of the really interesting things here is that the energy, this has formed this big ABCD, which has completed. And what we have seen is that selling pressure has come in to this market as soon as it also hit this 1.272. So we have a confluence of the pattern and a expansion of this range by 1.272. And as you guys know, the long-term subscribers, whenever we have a confluence of two or more patterns or ratios coming together, is always a point we really pay close attention to, because they tend to be usually stronger resistance or support levels depending upon the direction the market is moving in. Now where we are is very, very interesting with energy, because we have this ABCD pattern completed right at the 38.2% retracement. And if this market is bullish, and I mean excuse me, really bullish, then we should not go below this 38.2% retracement, in other words 9130 level. However, if we do, then I personally believe, in my opinion, we think that that's pretty bearish for the energy markets, and we could see the price of crude oil, for example, and energy complex related to crude, such as gasoline, could fall actually. So that's not an easy thing to grasp based on what we look at, especially in the media. The kind of tensions which exist, the wars that exist in the Middle East, in Eastern Europe side of things. One would think that the price of crude oil, for example, and the Brent would be much higher. But when we look at the markets and some of these patterns, this is what we go by. It looks like if we go below a certain price level, it is actually going to be bearish, and for that matter, I would expect the crude prices to actually move lower as well. And that would then fit into the scenario, the macro scenario that we had been developing, where we think that the uh, uh, yields would be moving lower because of the inflation moving lower, and if the crude prices will begin to move lower, that would be helpful with the inflation moving lower, and that would provide perhaps a data point for the Federal Reserve to start or embark on their regime of cutting interest rates, which should then be supportive of risky assets, right? So you see how things get put together in that sort of macro scenario that we had discussed. So have a look on the weekly video. I'll put a link to that towards the end of this video. So you'll see what I am talking about. If you're a new subscriber, welcome to the channel. Okay, so really interesting development in XLE, and looks like direction is actually lower for energy. Now, this doesn't mean that the energy stocks will begin to break, because the energy stocks are a little bit different. They do pay dividends as well, but the underlying commodity such as crude oil, there could be impact in the sense that crude oil might actually move lower. Okay, then we'll take a look at XLF. This is the financial sector select. Now, I'm not going to go into the detail of these patterns, but just to say that yesterday there was a massive candle lower, and I believe it was because of JP Morgan. We'll have a look, but it looks like we are still targeting the 1.272 expansion around $43 per share. Let's take a look at JP Morgan. There's already exclusive video done where we discuss JP Morgan patterns. So on Monday, I believe there was an interview which came from the CEO of JP Morgan, Jamie Dimon, and he mentioned something about the stock. You can go and have a look, and that caused a fair amount of a sell-off right into the 200-day moving average, and now it's just consolidating right there. So I believe that was a component for XLF. All right. Now let's take a look at HGX, which is the Philadelphia Housing Sector Index. And this one is really interesting because what we can see is that it has been improving and moving higher, but it's forming a secondary peak around here. And it's not a confirmed peak, of course, because it needs to move below this low. But we have been watching for this one, and we'll keep on watching this. And if this sector keeps on improving, that would be an indication of the perspective on the interest rates as well, that maybe there is a movement towards the downside, because I would think that would help with the mortgage rates coming to be lower and demand picking up, for example. So we are watching for this one here. The price remains above the 20-period moving average, which is above 200 period moving average. From a momentum perspective, it's a nice move higher. Watching for this 743.67 high, to be really carefully looking at 743 level. Now let's take a look at the consumer discretionary. So this is daily chart XLY. It also improved today, so bullish candle for that, price touching the 20-day period moving average. Really watching this trend line, downtrend line, and this micro downtrend line, and this swing high of 180. So if the price is able to get above that, then this means that stocks which are related to consumer discretionary are also improving. So maybe that's going to be another sign of some kind of relief or expectation of relief in inflationary pressures coming in, with the consumer improving, or the consumer confidence improving for discretionary products, for example. Okay, now we'll take a look at the transporters. Okay, so DJT, this is the transporters. So the transporters are really interesting now, because you can see that the broader market has moved higher, but the transporters are actually lagging, and we can see that, really bearish candle today, in fact closing below all these moving averages, so that's not very nice. What could be reason, I do not know for this, but it's also a sign that the kind of economy we are in is more digital economy. But we can see some improvement coming in today for the discretionary, consumer discretionary as well. So transporters, just watching this one, is forming a high below this high. In the weekend video, we did discuss this one, in a detail, where I discussed a scenario going back to the early 1990s market. So do watch that. And then we'll take a look at XLU. So this is the ETF for utilities, and you look at this really nice trend going on since October 2023, and looks like utilities is the place where the market is actually moving into. And this is the kind of thing which happens during inflationary periods, where there is substantial inflation present, and especially when the real interest rates, they begin to go above the rate of inflation. So here, I think there are higher prices to be expected. Maybe it's going to go and challenge these highs. But for right now, it's reaching this 73 to 74 level, where we have 78.6% retracement. We have this swing high, and also the 1.272 extension of this ABCD. So it looks like the ABCD is getting extended and maybe go and challenge these highs. So watching what will happen when it gets into this 73 to 74 region for the utilities. Okay, now we'll start by taking a look at the indices. So this is the S&P 500 cash daily chart. In the weekend video, we went into details about this pattern, also took a look at the weekly chart, so I will refer you to that. But for now, shorter term, looks like 53.50 where the market is moving to, and just consolidation for a few days. And we have also seen similar pattern happen in the European markets as well. And if we go and take a look at the futures S&P 500, it is also making new time highs. However, the cash is stronger, and that's interesting to watch. And the 1.272 comes 54.39 for the futures. Looks like the market wants to go and test this, and beyond this, we also have the 1.618 coming around 55.68. Now, whether it could be a double top formation, so we have a disconnect between the cash and the futures. For that, I would imagine we would really need to see some more bearish candles form for that sort of scenario, whether this is just going to be some sort of a double top formation, but don't really see that much here. Then we'll take a look at the NASDAQ 100 index. This is the NDX daily chart. You can see that NASDAQ is stronger. This is consists of the growth stocks. It's getting close towards the 1.272 expansion. We have a higher level as well. And then we will take a look at the futures. This is the NASDAQ 100 E-mini futures. It's a clean break above these highs coming in from the 8th of March. So the March highs are history now. Market made new highs on the daily chart for the NASDAQ 100 E-mini futures, and then 1.272 expansion at 19,121 is looks like where the market wants to head to. And we'll also take a look at the QQQ. This is the daily chart for the ETF. Invesco QQQ Trust Series 1, making these a new high. And then if we just go and take a look at on the weekly chart, we have higher targets here, which are essentially the 1.618 expansion of this entire bear market of 2022. So at 504. Now, I have not done further ABCDs right now, but for the weekend video, we'll have that as well. So keep on watching for that one for the weekend. Now let's go and take a look at the daily futures, E-mini futures for Dow Jones. Dow Jones, you can see, is giving a different kind of a picture. The market has gone into this gap area. Here we go. Here we go. Between this wick, I like to describe this as a gap. So as you can see, the NASDAQ 100 is fairly close to its 1.27 to expansion. The S&P 500 cash is also nearby. The E-mini futures, yes, that seems to be going in that direction. The Dow Jones, we do not see that yet. Now, Dow Jones is also an interesting index because it's a price weighted index. It's not an index which is market cap weighted, and it's about 30 stocks, and higher price stocks, if they move up and down, they have an impact. So for example, we just saw JP Morgan stock taking a beating last Monday, and that would impact this average because it's part of it. So yeah, we have to watch all these indices. Now, last but not least, Russell 2000 small caps. Small caps, they keep on closing below the 78.6% retracement, and it's been just doing that for a number of days. So it's a little bit concerning now, but maybe it's just going in this a wedge sort of pattern formation. So if we just draw this like this, and then we have we can draw the wedge like this as well. So like a dynamite triangle kind of a wicked wedge formation. So if it's able to get above this wedge pattern, especially the upside, and one of the things about these wicked wedges is when these patterns fail, or in other words, when there's a breakout on the either side, is rather spectacular. So just waiting for that. But I don't like the fact that it's closing below 78.6% retracement, but remains in a trading range. It rejected lower prices at the bottom of last Wednesday's candle. So that there is some good thing about it. And then if we just take a look at IWM, which is the Russell 2000 ETF, this one is stronger. The cash is stronger because it closes above the 78.6% retracement. Nonetheless, more work needs to be done for these, because you can see that how strong the Qs are. The QQQ, the NASDAQ 100 stocks, and the S&P is also stronger. Dow is kind of giving mixed signal, and the futures for the Russell 2000 need to improve, but the cash is above 78.6% retracement. And if we take a look at NYA Composite Index, which also includes the ADRs and about 2,000 plus stocks, it has also gone and made new highs and kind of in a trading range. So overall, looks like the low we saw in 19th of April was a low, and then a market has actually recovered a lot. Majority of the major indices making new highs. Dow Jones or futures kind of being there while we are at it. Let's just take a quick look at the cash for Dow Jones Industrials. So pardon me, the futures are weaker, and it also made a new high for the Dow Jones cash index. Now, just a reminder, this is our timing model. I will not go into the details of this, how it is constructed, separate videos about it. We are already half an hour mark, so I'll try to close the video. Apologies, got really long. We are getting really close into this window of 24th May to 29th May, where our timing model, we were looking for the correction to complete in this range from the timing perspective. Now, the actual low could come early as well. And the way we typically look at the timing is we have to give it 2 to 3 trading days on either side. So we're getting into that range. So we'll see how the markets will give the price action to us, and whether what will happen once we get into this timing zone. One of the things when we came up with this date, because of the timing model, this range for the date was one of the things we discussed was if we move into the second half of May and the markets are stronger, then this was highly indicative that perhaps we have seen a low which came in early, and that certainly has been the case, but we still need to watch for this time zone from the timing perspective. All right, so thank you very much, guys, for watching the video. Apologies, a little bit longer video, but we covered a lot of things, so thank you for sticking around with me. And if you like our analysis, how we look at the markets, then please do subscribe to the channel. And if you found this video of educational value, please do give it a thumbs up. It really means personally a lot to me, because that way I know that people find my videos of educational value, and just encourages me to keep on making more content for you guys. So thank you very much. Good luck, good trading, and speak so soon.